Good evening, Tina Pries here in Myrtle Beach. As the coastal air cools, our market shifts from speed to strategy. The autumn pattern along the Grand Strand is familiar. There are fewer transactions than the summer peaks, but pricing is broadly stable where condition and location are strong. Our Real Estate Action Index shows leverage normalizing. Inventory has been edging higher, and buyers now have more time to decide. The weekly median home price is about $469,900, up roughly 3.6% year-over-year. That's a subtle but important signal. Even with a slower tape, well-presented and well-located homes are still clearing at respectable levels. Average days on market sits around 119, evidence that the rhythm has slowed, and with that slowdown comes better selection and better negotiations. Here's what that means tactically. For buyers, prepare clean offers, insist on inspections, and use time to trade for repair credits or a 2-1 rate buydown. For sellers, presentation wins. Tight, clean condition, professional visuals, and list at today's comparable sales, not last spring's headlines. And for my investors, this is a basis market. Target micro pockets near the beach, golf-adjacent corridors, and neighborhoods with resilient long-term rental demand. Underwrite insurance and homeowners associations carefully, and buy where smart capital expenditures can unlock yield. Tonight we'll move from supply to demand and translate the week's prints into precise strategies for you. Weekly active inventory is 969 homes, up about 4.2% year-over-year. More choice changes behavior. For buyers, that means a better chance to match condition, location, and budget. Don't stretch for a tired listing when a cleaner comparable is likely to appear. Instead, press for repair credits or a 2-1 buydown that makes the payment work. For sellers, more competition raises the bar. You're not just selling a house, you're selling the best value on day one. Price precisely to current comps and lead with a flawless presentation. It's cheaper to stage and fix than to chase the market with price cuts and carrying costs. For investors, breadth is your friend. Map yield by block and value by bedroom. Prioritize buildings with controllable operating line items, and watch HOA health, rule stability, and reserves matter on the coast. At this inventory level, precision beats pace. The side that does the pre-work, clean contingencies, verified financing, and sharp pricing, wins. Pending sales total 476 this week, nearly 16% lower than a year ago. That's your forward pipeline, and it's softer than last year. Fewer pendings imply longer marketing times and a higher share of price discovery during escrow. For buyers, this is your chance to negotiate from data, not emotion. Verify maintenance history and trade speed and certainty for concessions. For sellers, expect sharper diligence and tougher appraisals. The cure is front-loading transparency and pre-inspections, with disclosures that are clean and a pricing strategy that holds up when the appraiser pulls comps. For investors, a softer pipeline creates motivated seller pockets. Your edge is underwriting. Build a realistic capital expenditure schedule, assume sensible vacancy and seasonality, and pay for location, not for glossy finishes that won't raise nightly rates or long-term rents. The macro red is that demand isn't gone, it's picky. Bids show up for property that solves a clear need, proximity to the beach or work nodes, HOA structures with predictable rules, while dated assets priced to yesterday are getting faded. Average days on market is 119, up about 17% year-over-year. That's a classic tell of a cooling market. Listings linger, and sellers test and then adjust. Buyers, use this to your advantage. Target homes in the 30 to 45-day window without a recent cut, or those just after a first reduction. That's where negotiation elasticity lives. Pair your ask with strong terms, shorter inspection windows and verified funds, to earn the concession. For investors, longer market times are your deal flow. Screen for properties with solvable defects, and avoid structural headaches that kill internal rate of return. 48.3% of properties show at least one price reduction this week, up about 4.4% year-over-year. Sellers, it is cheaper to price correctly out of the gate than to carry for 30 to 60 extra days and cut later. If you must adjust, package the cut with a value add, a credit for a rate buydown or closing costs, to pull in new eyes and survive appraisal. Bottom line, the market pays for clarity. If your listing communicates value on day one, you'll move it. If not, the market will force your hand. The data makes that plain and simple. This week's median pending price is $449,943, up about 4.5% year over year. Pending prices tell you where contracts are clearing now. How do we reconcile higher pendings with a slower tempo? In coastal metros, small shifts toward newer stock, renovated interiors, or east of Highway 17 tracks can lift the median even as individual listings negotiate. Buyers need to think block by block. Flood zones, school lines, HOA rules for short-term versus long-term rentals, and insurance history. These drive true value more than square footage alone. Sellers, if you're in a premium micropocket, golf adjacency, or walkable beach access, lean into that with tight pricing and pre-inspection transparency to justify the ask. Investors, your edge is converting capex into rent uplift. Buy where modest renovations move you into a higher rent tier or nightly rate, and where HOA stability protects operating performance. The takeaway is straightforward. Prices hold where utility is obvious and risk is controlled. They give way where condition lags or holding costs overwhelm. So here's the November playbook in one breath. Inventory is adequate and rising. Pendings are softer. Days on market are longer. Almost half of listings cut at least once. Yet median prices hold where location and condition are undeniable. Buyers should leverage time and breadth, pursue clean properties with clear utility, trade for credits and rate buydowns, and avoid overpaying for cosmetics. Sellers should win on day one with pricing to the live tape, and not what you perceive, tighten conditions, and use targeted incentives that keep deals intact through appraisal and underwriting. Investors should buy basis and execution, favor resilient corridors, and deploy capital where it actually raises rent or average daily rate. At Pries Capital Real Estate, we turn these weekly signals into property-level strategy. If you want this distilled for your neighborhood or building, call 843-999-1570. I'll deliver a block-by-block action plan you can trust. I'm Tina Pries. Thanks for joining us, and I'll see you at the next presentation.